Gold stocks are hot on the Toronto Stock Exchange today, including this one, K92 Mining, up, as you can see, by about 6%. One of the big positives, spot gold prices reaching a record high, rising to just more than $2,500 US per ounce for the first time. For more on this and other movers, we're joined, as always, by Stephanie Hughes of Bloomberg in Toronto. Stephanie, happy Friday afternoon to you. Let's talk about gold. It's been a good day to be a shareholder of gold stocks.
Absolutely, yeah. Gold is having a happy Friday as well. So K92 shares have risen as much as 6% today. That's the biggest intraday gain since April. And like you pointed out, K92 is actually rising in tandem with other gold names. The entire TSX top performer list was basically just gold miners and other companies benefiting from gold prices. So like you mentioned, this is because spot gold prices have reached a record high of $2,500 an ounce as traders become more confident that we could see a Federal Reserve rate cut at some point this year. So that beat last month's record as housing data, or the housing market was a bit weaker. So viewers keeping track of gold prices will know that this really got some significant lift in March when we first got that evidence of potential rate cuts. And lower rates are good for gold because it's an asset that doesn't pay interest. So the more evidence we see of that, higher prices go augment there. Rising geopolitical tensions have also been playing a role, those risks stemming from the Middle East and Russia's conflict with Ukraine. So all told, miners are benefiting quite a bit from these dynamics there, Paul.
And just to make things clear for viewers, the gold price we showed on the screen was the December contract price. That's the active futures contract. That price also moved into record high territory today. The record high there, $2,544, almost $2,545. Futures prices almost always are higher than spot prices. The spot price is lower. That's what Stephanie referenced, and much of the commentary today is referencing the spot price. It currently stands at $2,507 US dollars per ounce, a record. Let's talk about CAE, Stephanie.
Yeah, so those shares were down as much as 4%, and CAE being an aviation simulator company that trains pilots, whether they're commercial pilots or hobbyist pilots, those shares fell because it was hit with a downgrade to equal weight from an overweight rating by Morgan Stanley. So that's kind of like downgrading a stock to a hold from a buy. And the analyst cited risks in the civil aviation segment outlook, and she added that while the aerospace and defense markets are quite strong in her opinion, and there are capital deployment opportunities within the company, she said that there are industry headwinds with the commercial aviation training segment as aircraft delivery delays from Airbus and Boeing are causing some airlines to cut back on pilot hiring. So that's been kind of a drag for them. These shares have been steadily declining this year, except for in August when earnings and revenue managed to come slightly ahead of expectations. But fortunately for CAE, today was just a day on the downward trend there, Paul.
Stephanie Hughes, have a great weekend, Stephanie. We appreciate your reports. Stephanie Hughes of Bloomberg News in Toronto. Up next, the closing bells on Bay and Wall Streets.